welcome to business. Now, government would from April this year start engaging investors outside the country to raise 1 billion cedis. This announcement was contained in government's issuance calendar for the first quarter of this year. There's more in this Eurobond sale and a little over 11 billion cedis planning to be raised this quarter.
According to government, the 1 billion cedi Eurobond auction, which should be closed in the second quarter of this year, will be used to finance the budget deficit, which stood at 10.9 billion cedis according to the 2018 budget. Rating agency Moody's has, for instance, warned that Ghana could be paying above the market price or high interest rates if it goes ahead to issue the bond this year. But Finance Minister Ken Ofori-Atta has argued that they have measures in place to ensure that Ghana secures a good rate for the planned Eurobond sale. The government issuance calendar showed that managers of the economy will be raising a little over 11 billion cedis in the first 3 months of this year. According to the finance minister, almost 9 billion cedis will be used to finance maturing and rollover debts. Ken Ofori-Atta says only 2.1 billion cedis should be seen as fresh cash being raised. A careful look at the calendar that government is actually going to borrow less this quarter compared to the same period for last year. The calendar showed that the borrowing target for this quarter is 6.3 billion cedis less than 17.4 billion it took in the first quarter of 2017. However, some have argued that this decline has been influenced by the lower deficit for this year compared to 2017. Some analysts have argued that this decline amount being borrowed and together with the issuance of long-dated bonds and debt profiling could help reduce the public debt, which stands at 139 billion cedis ending September 2017.
And in a related development, investment analyst Mahama Idrisu is pushing for more details on how government plans to use the fresh 2.1 billion cedis being raised.
Impact would this borrowing do to the economy? Is it going to have the same impact like we had the 17 billion in 2017? If it's going to bring the same impact and even reduce some of the, or improve some of the fundamentals that we have, then we think that we're on the right path. Now, there's a calendar to raise a 1 billion cedi equivalent in dollars.
I'll be coming that bit on the Eurobond, but I ask myself, this hang of rollover, the maturing debts, can we really get over this whole issuance of bonds every quarter, every year to finance deficit, to meet government expenditure needs and all that? Because we thought that we are going to get over this. Now we're going to roll over. Why don't we seem to be getting over this thing when government is talking about lengthening the profile and reprofiling and all the rest?
George, you know, this issue of borrowing and keep borrowing is not government issue. It's Ghanaian issue. We put too much pressure on politicians. And politicians, by satisfying us, give us a lot of promises. Even though these promises, 50–60% of them are not achieved, it pushes the government, it pushes the financial management team to be able to satisfy it. And this is what leads to this borrowing, constant borrowing from year to year. Now, if government expenditure is increasing because we are promising all kinds of things, the only way government can borrow, looking at the tight nature of our budget, is to borrow and satisfy this expenditure. And because we have mostly short-term debts, it's very, very difficult for the government to restructure and make sure that in the next few years they will not borrow to reduce the perennial borrowing. So what we need to do is to start from the scratch, make sure that we give executable promises that will not lead to excessive borrowing. And then we can reduce the amount of borrowing quarter on quarter. And the next 3–4 years, we'll be able to see that there's more gap between revenue and expenditure. That is by taking out our deficit borrowing.
Now, away from that, one of the world's biggest oil and gas companies, ExxonMobil, is set to begin oil exploration in the country later this year. This would happen after the company signs the necessary oil exploration agreement with government next week. The company shown initial interest in Ghana's sector when it wanted to take up some stakes of Cosmos Energy's block in the Jubilee fields in 2009 but failed. The following business desk report looks at why this entry is being described as a major breakthrough for the oil sector and the economy.
Joy Business understands a formal agreement to guide ExxonMobil's exploration at the deep water West Cape 3 points in the country will be signed next Thursday. This would pave the way for it to start exploration activities later this year. For a lot of industry watchers, they are not just excited by ExxonMobil's entry, but also the signals that it will send to other global firms. The energy giant's entry would result in some significant capital injection in the economy, fresh job creation in the oil and gas sector, and other related oil and gas companies that its entry will bring. The company is said to be worth the value of about 20 economies put together. ExxonMobil has been described by a lot of international agencies as the biggest energy group in terms of revenue, profits, and market size. In 2016, the oil and gas company's revenue stood at $218 billion. ExxonMobil had always wanted to operate in Ghana since the country began oil production. Therefore, the coming to Ghana of the company is a dream come true.
Now, one of the new entrants into the banking industry, Heritage Bank, has ruled out merging or going into an acquisition by another institution to help meet new capital levels. Commercial banks in the country are expected to meet the new capital requirement by the end of December 2018. However, there are fears that local banks may struggle to meet these new levels, forcing most of them to merge or be acquired. But Managing Director of Heritage Bank, Patrick Edwin Fishan, says there would not be the challenge for the bank.
We're currently in discussions with some institutional investors, external of course. The existing shareholders will put up part of the shortfall that we currently have, and there are other institutional investors who have expressed strong interest in bringing up the differential. Having said that, I mean, there are various stages that you need to go through to achieve this capitalization we're looking at. And like I said, we are broadly in line with where we expect it to be.
I get from you that it won't be a problem. These institutional investors that are coming on board, forgetting about their names, and would it still end up with Heritage Bank, as in the current shareholding structure, still having the majority stake, or it will possibly lead to some takeover or measures, one would ask?
No, we don't have any measures on the table. We're not going to acquire the bank, and we are not going to be acquired. The institutional shareholders coming on board have not expressed an interest in taking over the bank. The existing shareholders will continue to maintain the majority shareholding. So Heritage Bank, in its current state and form, will continue to be a going concern. Will continue in operation in the foreseeable future.
That's it for Business Tonight. Many thanks for your company. My name is Emmanuel Apuaji. There's more news ahead. Don't go away. Good evening.